welcome to all the participants in today's session on latest judgments in GST the month of February 2024. Our series is intended to share and discuss the latest judgments which have come in the last month, because as we know that the litigations are increasing thick and fast in GST, and the more we are abreast with the latest judgment, the better prepared we would be to face those litigations. And what I have planned, I have for all the judgment which have been reported in the past month, I have selected a few judgments, and out of those few judgments, I have selected few for the part of discussion for today's session. So starting with the today's session and the latest judgments in February 2024 GST. So we have prepared the judgments on a section-wise basis. That what are the sections and in which sections the latest judgments have come. So in section 3, there is a judgment by Honorable Bombay High Court wherein they have said that Deputy Commissioner CGST audit is the proper officer and board has power under section 5 to notify and assign the powers to the officers notified under section 3 by central government for the purpose of central goods and service tax. In section 5 by Telangana High Court, it has been said that in the particular matters, since circular number 31/5/2018, 9th 2018 specifies monetary limit for the purpose of issue of show cause notice. Therefore, in the instant case wherein the assistant commissioner issued the show cause notice, but the monetary limit was beyond his powers. So therefore, in this case, it was said that assistant commissioner is not the proper officer for the purpose of issuance of the show cause notice, since the show cause notice was beyond the monetary powers of the given by the circular. See, participants and friends, section 3 and section 5 are two basic sections which provide that which are the officers who have been notified and what are the powers entrusted by the board to the respective officers in GST. So whenever we are receiving a show cause notice, the first thing which we should do, we should see that whether at all the person who has issued the notice or who has issued the order is competent enough or has the powers to issue that notice or the order. So section 3 and section 5 form the very basic of the litigation part. If we can say that whenever a litigation is initiated, the first part starts with section 3 and section 5. Now coming to section 6. Now section 6 again is a very litigative section, because what we are seeing in a day-to-day practice that both central division and state authorities are moving ahead and passing orders on same issues twice, or they are entering into the same issue and issuing, then they are issuing a summon or a show cause notice, or in case they are issuing even orders on same issues, wherein supposedly CGST has issued an order, the SGST on the same issue issues another order. So there are two judgments, one by Honorable Guwahati High Court and second by Honorable Calcutta High Court, wherein Honorable Guwahati High Court said that once a proceeding has been initiated, so in this case, the proceeding was initiated by CGST officer and he passed an order on 14th of November 2023. Then SGST officer on the same issue passed an order on 11th of December 2023. So Honorable Guwahati High Court said that once a proceeding has been initiated in either of the two acts, that is CGST or SGST, another proceeding for the same period cannot be issued under the another act by the another officer. And another case which was before Honorable Calcutta High Court, wherein CGST had issued a show cause notice on a particular matter. Subsequently, the audit wing of SGST authority initiated another proceeding on the same matter. So Honorable Calcutta High Court said that once a proceeding has been initiated by the CGST authority, therefore the adjudication order would also be passed by the CGST authority, and the proceedings initiated by the SGST authority on the same matter would be kept in abeyance. So these are two very important judgments, because this is one thing which is being faced commonly across the country, wherein CGST and SGST are competing against each other for deciding matters on particular issues. Now coming to section 7, the relevant cases which have come on section 7 in the last month. One is by Honorable Karnataka High Court, wherein they say wherein the issue was regarding whether any service is being provided by holding company to its subsidiary company when it is holding shares in the subsidiary company. So Honorable Karnataka High Court, taking note of the fact that a circular has been issued in July 2023, wherein it has been cleared that there is no such service when the holding company holds the share in subsidiary company. Therefore, relying upon that circular, the matter was decided in favor of the taxpayer. Second is one very important judgment by Honorable Telangana High Court, wherein they have said that the transfer of development rights is not similar to sale of land and building, which has been excluded in Schedule 3. And since transfer of development right is different from sale of land and building as covered by Schedule 3, therefore, such activity of transfer of development right is liable to tax under CGST and relevant state GST Act. Now, coming to decisions given under Section 9. If we see, there are a host of decisions in Section 9. Few of the decisions are on part of royalty. Honorable Madras Court, in case of levy of tax on royalty, has granted stay in view of the hearings being conducted by Honorable Apex Court on this matter, that whether royalty all is a tax or a fees. Because if it is a tax, there can be no GST on the tax, but if it is a fees, then there can be GST on the fees. So Honorable Madras High Court has held that up till when the final decision is given by the nine judges bench of Honorable Apex Court, there would be no recovery, and the demand pertaining to GST and royalty was stayed by Honorable Madras High Court. Then there is a Calcutta High Court judgment wherein they have very categorically held that GST Act is a complete code in itself, and tax is not subject to realization of tax by assessment. So there are many a times we come across contentions by the taxpayer, okay, sir, we have provided the services, but the payment has not been received. Therefore, we have not issued the invoice. In this case, Honorable Calcutta High Court said that it is a tax on the transaction. It is not linked with realization of the consideration by the assessee. Therefore, once the activity is completed, the tax is due. Now, another very important matter which has now reached before Honorable Odisha High Court. If we all remember, there was a circular on 6th of October 2021, wherein the board clarified that a tax on royalty for the period 1st of July 2017 to 31st of December 2018 would be leviable at the rate of 18%. Previously, there were judgments by AAR and AAR wherein they said tax would be leviable at the rate on which at the rate applicable on the goods which are being extracted. So supposedly, if I have a mine and extracting goods at the rate which are taxable at the rate of 5% in GST, I was liable to pay tax on royalty under RCM at the rate of 5%. But that circular retrospectively clarified that the intent of the legislature was 18%, and therefore a flat rate of 18% would be applicable for payment of tax under RCM. Now, this particular circular has reached before the Honorable Odisha High Court, and what's more important is that the observation by Honorable Odisha High Court, wherein they said that the court was satisfied that prima facie case was made out as the petitioner had demonstrated that its transaction fell within the scope of residuary entry serial number 17 with 9973, which attracted tax at the rate of 5%, and which it had discharged liability tax at the rate of 5%. So what we can see, there are two issues before high courts in case of royalty. The first is whether at all tax is payable on the amount being paid as royalty, because the matter is pending before the Honorable Apex Court. The second matter is that what is the applicable tax rate, whether it is 18% or the tax rate applicable on the respective goods for which the mining is being done for the period 1st of July 2017 to 31st of December 2018. So one of the first matter is before the Honorable Apex Court, and thereby accordingly decisions would be taken by the respective high courts. The second matter is pending before the respective high court, and in my opinion, what the court has also observed, that the prima facie, the balance of convenience is in favor of the assessee. That is, if at all tax is to be paid on royalty, it has to be at the respective rate on which the tax is payable on the goods being extracted. Then there is another important judgment by Honorable Andhra Pradesh High Court, wherein the question was that whether the value of the byproducts, supposedly a job worker is doing a job work, and while doing his job work, certain byproducts are produced. Those byproducts are kept by the job worker with himself. Now, whether the value of those byproducts would be added to the consideration being received by the job worker for the purpose of carrying out job work. Honorable Andhra Pradesh High Court, relying upon its earlier judgment, said that the value of the byproducts which are being kept by the job worker would not be included in the value of the consideration which is being charged by him from the principal for carrying out the job work. There is another important matter which has reached before Honorable Guwahati High Court, which is pertaining to GST and the activity of construction of road, wherein consideration are received in deferred payment annuity. In this case, there was a circular in June 2021, wherein it was clarified that the consideration which is being received in deferred payment annuity would be leviable to GST. That circular somewhere down the line went contrary to the respective entry in the notification. So therefore, now the matter since has reached before Honorable Guwahati High Court, and it would be deliberated or judged by the High Court that whether at all the consideration which is being received in deferred payment annuity by the contractors who have constructed road for NHAI would be leviable to GST or would be exempted from levy of GST. Honorable Allahabad High Court, similar to Madras High Court, has granted stay on levy of tax under RCM on royalty. Now, coming to the decision on value of supply, Honorable Madras High Court, in a very significant decision relating to the treatment of discounts in GST, we all know that treatment of discount in GST is one matter which is spread across the country, and it is having number of litigations on this aspect that whether at all the person who is receiving a discount is liable to either pay GST on the discount being received or is required to reverse ITC. On the question of reversal of ITC on discounts being received, what we can say that if the supplier has issued me a credit note on which he has reduced his tax liability, thereby I am required to reduce my ITC. But merely because my supplier has issued a credit note wherein he has not reduced his liability, I am not required to reverse my ITC because there is no specific section. Now, coming to the second aspect, can discount be added to the value of supply by treating it as a subsidy directly linked to price? Because if we go through section 15, subsection 2, it says subsidy directly linked to the price would be added to the value of supply. Although this judgment has a far-reaching impact, but for a concise discussion on this subject, I would like to read verbatim what has been said by Honorable Madras High Court, that a discount by itself will not qualify as a subsidy. However, a discount offered by a distributor or supplier or manufacturer to the buyer or a recipient simpliciter cannot form part of the transaction value. So if a discount has been provided by a distributor or supplier to the buyer or recipient, merely because discount has been given, it would not become part of the transaction value unless such a discount is offered on account of subsidy for such supplies by a third party. So what Honorable Madras High Court has said, that if the discount is being provided by the manufacturer or the supplier to the recipient, it would not be part of transaction value unless until a third person who is not part of the transaction between a buyer and a seller provides that discount. So what could be an example for this? Supposedly there is a builder who says that who has an agreement with the electronics shop owner that if my customer who has purchased a flat in my township comes to you, you have to give a 10,000 rupees discount to him. Now, the electronic shop owner gives a 10,000 rupees discount to the person who has purchased flat in the township and comes for purchase of air conditioner to the electronic showroom owner. Now, the 10,000 discount which has been given by the electronic showroom owner to the purchaser, that is reimbursed by the builder to the electronic showroom owner. Now, since this 10,000 is being reimbursed by a third party to the electronic showroom owner, therefore, in that case, that 10,000 would also become part of the value of supply and would be treated as subsidy directly linked to price. And whatever amount the electronic showroom owner has charged to the purchaser of air conditioner, 10,000 additional will also be added. So, this is the scope of reimbursement of an amount by way of discount to a third party, which Honorable Madras High Court has stated. They further go on to say that there is no scope for confusing the discount offered to the petitioner and the discounted price at which the petitioner effects further sale to its customer. Now, for understanding this line, let's take an example that Maruti has a showroom, say at Delhi, and they come up monthly scheme that whatever vehicles you would be selling during the month of say February 2024, we will you will offer a discount to your customers of 25,000 rupees, and out of those 25,000, 20,000 we will be reimbursing to you. So what Maruti is saying that we will offer 20,000 to you and you have to pass on 25,000. So what Madras High Court has said that there is no scope for confusing the 20,000 offered by Maruti and the 25,000 which is offered by the owner to the customer, and therefore the 20,000 which is being received by the showroom owner would not be treated as part of his consideration for the vehicles to the consumer. Because these are two independent transactions, there is no scope for intermingling them for demanding tax from the petitioner. So this is a very important judgment which clarifies the scope of taxability of discount. And in my opinion, this is one judgment which has to be preserved because it lays down a very important principle. Now coming to the decisions on section 16 of CGST Act, that is relating to input tax credit. Honorable Calcutta High Court in case of Lakshmi Traders have specifically said that the department should first proceed against the seller and only in exceptional circumstances they should proceed against the recipient if the tax has not been deposited by the seller. There were similar judgments in past by the Honorable Calcutta High Court in case of LGW Industries or in case of Suncraft Energy. So this judgment is also on the similar lines. Another judgment by Honorable Kerala High Court, wherein they have said that if the burden of proof which has been casted under section 55 on the purchaser is not discharged, then ITC would not be available to the recipient. And specifically what they have said, the relevant aspect by which they treated that the burden of proof has not been discharged, they said that petitioner did not produce any credible document in respect of the inward supply such as GST of the taxpayer was not present on the invoices. That is, the GST of the recipient was not there on the invoices, and the seal of the supplier was also not present on the invoices. So section 155 is a very dangerous section. And as we all know, there is a judgment by Honorable Apex Court in case of Section 70 of Karnataka VAT Act, which was given in case of Ecom Guild Trading Company in March 2023, which has specifically casted that the burden of proof has to be discharged by the recipient to claim the credit. Another important judgment by Honorable Madras High Court, one situation which we commonly come across. I purchased goods from a particular supplier in 1780. In 2023-24, the department carries out a search against that supplier and retrospectively cancels the GSTN of the supplier, treating that he was no longer in existence, and thereby as a recipient I am disallowed the credit even though he existed at that time in 1718. Honorable Madras High Court has specifically said that the petitioner purchased goods in 1718, and at the highest, the petitioner may be called upon to produce evidence of the existence of the supplier at the relevant point of time. So, whenever I am purchasing goods from supplier, I do not take a guarantee that till eternity he will exist at that place. I can only ensure that when I purchase goods from that supplier, he was in existence at that particular time. So it's a very important judgment which restricts the responsibility of the recipient to the point when he purchased the goods from the supplier. Another important judgment by Honorable Madras High Court. See, these are all judgments which have come very recently or reported very recently in the month of February 2020-24. Sometimes in the initial period, what happened that people forgot to claim ITC in GSTR 3B. What they did that they claimed ITC in GSTR 9. One similar matter reached before Honorable Madras High Court, wherein it was not ITC was not claimed in 3B but was claimed in GSTR 9. Honorable Madras High Court quashing the order of the officer and observing that the registered person has asserted that he is eligible to claim ITC by referring that the entries are reflecting in GSTR 2A and he claimed it in GSTR 9. Honorable Madras High Court said that the claim of ITC cannot be rejected merely on the ground that ITC was not reflected in 3B. And the officer should examine the ITC claim by examining all relevant documents, including by calling upon the registered person to provide such documents as by the officer. So this judgment now opens an entire gamut for the claim of ITC, wherein the claim of ITC is not restricted only up to the point wherein they are reflected in GSTR 3B. If it is reflected in GSTR 9, Honorable Madras High Court has said that officer has to verify the claim with respect to the documents which are to be produced by the taxpayer. Now coming to the decisions on section 29, which pertains to cancellation of registration of the dealer. That supposedly I am a person registered in GST and the department cancels my registration, I have to go to the department or to the appellate authority or to the high court for the restoration of my registration. So there are a whole host of decisions, and to be specific, there are 29 such decisions, and I would not be going into the all such decisions, but restricting to the basic principles which have been laid down, because most of the decisions are on similar aspect. The first principle is that if there is a failure to furnish returns for a continuous period of 6 months, merely that failure does not entitle the officer to cancel the registration from a retrospective date. So if I have not filed my return, say from the period July 2023 to December 2023, nowhere empowers the officer to cancel my registration from 1st of July 2017. There has to be a specific reason that why the returns which have been validly filed are also be nullified by way of cancellation of registration from a retrospective date. Second is that if a particular notice has been issued for cancellation of registration and it says and specifies a particular ground, the order passed for cancellation of registration cannot go beyond the ground which has been stated in the show cause. The third, which has been given by Honorable Madras High Court, that if there is a notice which has been sent by a portal or by through email for cancellation of registration, and if the taxpayer does not appear on the given date, there should be a facility that the notice is being delivered manually. looking to the various aspects and knowledge of the IT technology of the recipients. So therefore, they specifically ask the department to have an alternative procedure for service of the notice in case wherein notice has been sent through portal or through email, but still the taxpayer does not turn up on the hearing date. In another decision by Honorable Madras High Court, when they said that if the registration is being cancelled on account of registration being taken by means of fraud, willful misstatement, or suppression of facts, specific material has to be placed on record that why it has been treated, why it is being treated so. Now, another decision by Honorable Telangana High Court that whenever a order for cancellation of registration is there, at the outset it says that the reply has been furnished on a particular date, and in the next line it says that no reply was furnished. So various high courts in these 29 decisions itself have come very heavily on the department that how lethargically or casually you are passing an order. That at one point you are specifying that the reply was submitted, and the next line you are specifying that reply was not submitted. And if at all reply was submitted, why the same was not discussed? And therefore, citing this irregularity, Honorable Telangana High Court quashed the order for cancellation of registration. In another decision by Delhi High Court, where many decisions which have been passed by Honorable Delhi High Court on cancellation of registration, they have specifically said that if at all the registration has to be cancelled retrospectively, the show cause notice should specifically say that the registration is being sought to be cancelled retrospectively. It cannot be a case wherein the notice says that why not your registration has to be cancelled, specifying any date, but the order cancel it from a retrospective date. The decision by Honorable Delhi High Court in case of NP Trading Company versus Commissioner of GST, wherein they said that if the registration is being cancelled because the allegation against the dealer is that he was issuing invoice without supply of goods, there has to be specific details of the evidence which are available on record which say that these were the invoices which were issued without supply of the goods. It cannot be a bald allegation that we have come across instances that you are issuing invoice without supply of goods, then therefore why not your registration be cancelled. So this is one other important decision by Honorable Delhi High Court. Now coming to the next decision by Honorable Allahabad High Court, wherein they said that supposedly if the registration of a person has been cancelled in February 2022 and thereafter notices were being issued on the portal say in the month of September 2022 and October 2023, and on the basis of those notices which were issued on portal the assessee does not appear and an ex parte order is passed against him, so that order would be violative of principle of natural justice, because once the registration has been cancelled with effect from February 2022, a person is not expected to visit GST portal and check the notices which have been served on the portal. So if the registration has been cancelled and any assessment of proceedings are being carried out, in such cases the notices for such proceedings which are being conducted after the cancellation of registration has to be served manually or has to be communicated properly to the taxpayer, and merely uploading on the portal would not be sufficient, because since the registration is cancelled, the taxpayer cannot be expected to visit the portal on a daily basis. Now, another decision by Honorable Delhi High Court in case of cancellation of registration, wherein the specific allegation was that the amount as tax has not been paid to the account or the credit of central government or state government beyond a period of 3 months on which such payment was due. So, in this case, Honorable Delhi High Court said that there is no such specific requirement for cancellation of registration. And also the notice did not, since the notice did not provide that the registration has to be cancelled retrospectively. Therefore, a retrospective cancellation is also incorrect. But since initially the taxpayer himself had asked for cancellation of registration, therefore the date on which the taxpayer asked for cancellation of registration would be the relevant date for the approval of cancellation of registration. There are many judgments which have come wherein it was seen initially the taxpayer applied for cancellation of registration. The department issued the show cause notice, then rejected the cancellation application. Then department itself issued a notice for cancellation of registration and then cancelled it from a retrospective date without putting to the notice of the taxpayer that your registration is sought to be cancelled from a retrospective date. So in such case, high courts have said that the specific notice has to be given for a cancellation from a retrospective date. Now, in a case before Honorable Andhra Pradesh High Court, wherein the notice was issued for non-compliance of any specific provision in GST Act or rules made thereunder as may prescribe, but the notice did not provide any specific provision that for which the non-compliance was there. So, in such case, the cancellation was held to be invalid because there has to be specific mention of the provision which has not been complied and for which the registration cancellation of registration of the dealer is sought to be done. Now, in another case before Telangana High Court, wherein they did not disclose the grounds on which the cancellation is sought to be made, and merely a notice was issued without specifying any grounds. Therefore, in such case, the cancellation of registration was held to be invalid. In another case before Delhi High Court, the registration was cancelled on the ground taxpayer found not non-functioning oblique not existing at the principal place of business. And since the ground was this, and the reason that the show cause notice provide the ground that taxpayer was not found on the particular place, and since on the basis of show cause notice he also did not appear on a given date of the hearing, therefore the registration was cancelled from a retrospective effect. Such cancellation from a retrospective merely because the taxpayer was not found on the principal place of business and he also not appeared on the given date of hearing cannot be a ground to cancel the registration from a retrospective date. Yes, they can be cancelled from the date on which the inquiry was done, and on that date, if the taxpayer was not found on the date of inquiry, a prospective cancellation can be done, but a retrospective cancellation cannot be done. Now, coming to the decisions under Section 37, wherein Honorable Bombay High Court in two decisions has allowed the supplier to correct the GST of the recipient and also allowed to correct the invoice details furnished in GSTR1 pertaining to financial years 2017-18. They have said that since allowing the supplier to correct the GSTN of the recipient or correcting the details of invoice in GSTR1 is revenue neutral and would not be causing any harm or loss to the revenue. Therefore, such rectification is allowed to the supplier. Now, coming to the decisions given for Section 54. Honorable Bombay High Court in a very significant decision has said that if the application has been furnished online and even assuming that some of the relevant documents were not uploaded, then merely non-uploading of those documents which can be corrected later on and which are in the nature of a curable defect cannot be a reason to reject the application and then say that since the limitation has expired, therefore the application cannot be filed again. What is important is the filing of the application online, and if the curable defects are there, that can be cured subsequently, and merely the presence of curable defects would not suffice for the cancellation or rejection of the refund application. In another case before Honorable Madras High Court, wherein the application was filed under any other category and the officer rejected that there Since your refund does not fall under any of the specified cases given under section 54, therefore your refund application is rejected. Honorable Madras High Court said that there is a specific category of any other refund claim and that has to be analyzed on merits by the officer. In another case before the High Court, wherein the details of shipping bill were not correctly filed in GSTR1, Honorable Calcutta High Court allowed the details of the shipping bill to be rectified and said that the law cannot be so rigid so as not to permit the claimant to rectify the mistake that has been committed inadvertently. So supposedly I have a export against IGST and I incorrectly file a shipping bill number. This decision allows me to rectify it subsequently because it is an inadvertent mistake being committed by me. Another decision by Honorable Bombay High Court in case of Tushar Kumar, wherein they said that if a person is ready and willing to pay higher duty drawback, the balance IGST refund after adjusting the higher drawback should be allowed to the taxpayer. Another significant decision by Honorable Calcutta High Court in case of Malabar Fuel Corporation, wherein the inward supplies were taxable at the rate of 18%. The bulk purchase of LPG was being made at the rate of 18%. However, after bottling, such LPG gas was being sold at the rate of 5% or 18%. The refund was rejected because stating the circular 135 number that your input and output supplies are same. Honorable Kerala High Court said that if at all there is the accumulation of the credit merely because input and output are same cannot be a ground for rejection of the refund under inverted duty structure. What has to be seen is the entire inward supply is being received and the output supply being made. Merely because the nature of the inward supply and nature of the outward supply is same, that does not mean that the inward accumulation of credit cannot be there, because there are many inward supplies which go into making the final outward supply. So there, in this case, wherein bulk LPG was being purchased at 18%, and after bottling it was being sold at 5 and 18%, accumulation of ITC was there, and refund under inverted duty structure was allowed by the High Court. One significant decision by Honorable Madras High Court in case of Opportune Trading Research Lab LLP, wherein they said that even if the payment is being received through PayPal for the export of services being made, since PayPal is the authorized foreign exchange dealer by RBI, therefore it would be treated that the payment has been received in foreign currency even though the final rate is in terms of INR. Now coming to the decision under section 63. In this case, Honorable Odisha High Court said that once the department has given a registration to a particular person and thereafter an order is being passed. Supposedly a person was unregistered initially, there was an anti-evasion action against that person, and say on a particular date the person was given a registration, say from 1st of July 2017 to date, and after that once a registration has been given by the department, although not voluntarily sought by the tax, but since he was liable to get registered, therefore after the anti-evasion action the department gave him a registration. So once a registration has been given to him and an order has been passed against under section 74, thereafter order under section 63 cannot be passed, because the primary condition for passing an order under section 63 is that the assessee, even though he was liable to be registered, was not registered under the statute. But now, since on the date of passing of order under section 63 he is registered, so therefore The order cannot be passed under section 63 in such case. Order can only be passed under section 74. Now, coming to another decision by Honorable Madras High Court in case of section 65, that is audit by department. The question was that once an audit has been completed by the department and ADT 02 is being issued. So while issuing ADT 02, whether at all it is mandatory to provide that that for the issues which have been identified in the course of audit, the proceedings have to be initiated in the section 73 or 74. So let's take that department says that there is a difference between a 3B and 2A in ADT 02. Whether department is also required to mention that for this difference between 3B and 2A, the proceedings have to be initiated under section 73, 74, or the discretion can be left to the proper officer. In this case, Honorable Madras High Court said that section 65 only contemplates identification of a discrepancy, which has to be mentioned in ADT 02. After that issuance of ADT 02, whether the notice is to be issued under section 73 or section 74, it is upon the proper officer who is issuing the show cause notice to decide, and merely absence of such mention of the provision would not render the SCN which was issued a invalid SCN. Now coming to the decisions under section 67, there are two decisions from High Court when they said that the unaccounted cash cannot be seized under section 67, and another decision by Honorable Odisha High Court when they said that under section 67 subsection 5, the department is well within their right for reasons to be recorded in writing to deny grant of certified copies of the orders of or certified copies of the order sheet or the order notes. Coming to the decisions under section 73, 74, Honorable Punjab and Haryana High Court and Allahabad High Court, hearing the matters wherein the validity of the notification for extension of time limit for issuance of the notice under section 73, 74 was challenged. They have admitted the petition, but at the same time they have asked the proceedings to go on, but no coercive action to be taken. They have said that the department may carry on the proceedings, but the final order may not be passed. So Honorable Punjab and Haryana High Court had said that the validity of the notification which has extended the time limit for issuance of the notice for the year 2018-19, they have admitted the petition, but the department can carry out the proceedings but should not pass the final order. Similarly, Honorable Allahabad High Court has also admitted the challenge to the notification which extended the time limit for issuance of the notice. Honorable Madras High Court, in case of Titan Company, had said that if the notices are being issued in a bunch for multiple years, so supposedly department has identified certain thing for 3 years, say 17, 18, 18, 19 and 19, 20. The department, what commonly they are doing, they are issuing a common notice for all the 3 years. They are not issuing separate notices. For such bunching of show cause notice, Honorable Madras High Court said that this bunching is illegal, and merely if the notices are being bunched for multiple years, the limitation would be seen separately for each of the years. So therefore, if supposedly today some person is receiving a notice for 17, 18 to 21, 22 under section 73, the limit, even though a common notice has been issued, but limitation for all the 5 years would be seen separately, and thereby applying the principle 17, 18 and 18, 19 issuance of notice under section 73 is time barred as of now. In a matter before Honorable Madras High Court in case of K.S. Janathan versus Deputy Commissioner versus Deputy State Tax Officer, wherein a 100% penalty was imposed for order passed under 73. It was held to be an invalid order because there nowhere 100% penalty has been specified to be levied under Section 73. Another decision by Honorable Madras High Court wherein multiple e-way bills were generated for same transaction and for which commonly notices have been issued across the country. Honorable Madras High Court has said that merely multiple e-way bills have been issued for same transaction would not render the taxpayer liable for payment of tax on those multiple e-way bills. There has to be evidence on record that these multiple e-way bills were issued for multiple transactions. Only then a demand can be created against the taxpayer. In a matter before Honorable Bombay High Court in case of unique specialty chemicals, wherein the taxpayer accidentally mentioned the HSN code in the column of taxable value for the e-way bill and thereby tax was auto calculated by that taxable value. Now on that taxable value. So ideally the e-way bill which should have been for 3081 was generated for 3 crore 40 lakh 49,090. And the department created a demand against the taxpayer treating that the actual value was 3 crore 40 and it was disclosed at 3081 in GSTR1. So there was a mismatch between a e-way bill data and GSTR1 data and thereby the demand was created. Honorable Bombay High Court quashed order and said that there should be a facility or the taxpayer should be permitted to correct the bona fide mistake and these mistakes cannot be used for creating heavy demand against the taxpayer. There are multiple decisions by High Court which I have referred, wherein they have said that the reply which has been furnished by the taxpayer has to be considered properly by the officer, and merely mentioning that reply furnished but not considered properly would not be sufficient to state that the reply which was furnished by the taxpayer was considered in entirety. This would be a violation of principle of natural justice. I would not be going through each of those decisions, but once a presentation is received by the participants, they can go through those decisions. One important decision by Honorable Karnataka High Court in case of Appario Retail Private Limited. See, whether DRC 1A has to be issued or not, this is a point of litigation, which is not yet settled, although amendment in the rules have been made. But what Honorable Karnataka High Court said that once DRC 1A has been issued, leaving aside the debate that whether at all it is required or not, but once DRC 1A has to be issued, has been issued, and a reply has been filed by the taxpayer, and subsequently DRC 01 is being issued, then that reply has to be considered while issuing DRC 01. The reply filed against DRC 1A cannot be straight away negatived or cannot be left treating it as idle. Once 1A has been issued, it becomes imperative upon the officer to consider the reply being filed against DRC 1A. Now coming to the decision by Honorable Allahabad High Court, wherein a notice was issued on the basis of certain reports. But those reports were not furnished to the taxpayer. So Honorable Allahabad High Court said that once the report on the basis of which a notice has been issued, it is imperative upon the officer to provide those reports as a relied upon document along with the notice. And if those reports are not being provided, even though an order has been passed or an appellate authority has decided against the taxpayer, the non-provision of the report goes down to the very basic fundamental of the proceedings, and the entire proceeding by the officer or by the appellate authority is violative of principle of natural justice. In a decision by Honorable Himachal Pradesh High Court in case of Garg Sons Estate Promoters, wherein two orders were passed for the same supplies made by RJ Trading Company, Honorable Himachal Pradesh High Court said that it is an irreparable loss which cannot be compensated in terms of money to the petitioner, wherein he has been subjected to two orders on the same supplies being made by the same supplier. So this cannot be done because this is an irreparable loss to the taxpayer. Coming to section 75, and there are a whole host of decisions on this section 75. I would be taking some of those decisions only. The first principle which has been laid by multiple high courts, whether by Honorable Allahabad High Court or Bombay High Court, that even if no request is being made by the taxpayer for opportunity of being heard, it has to be mandatorily given by the officer if any adverse consequence is contemplated by him against the taxpayer. This is now a settled law because it is coming from various decisions of various high courts. Opportunity of being heard has to be given, even though it might not be asked by the taxpayer. Another decision on this opportunity of being heard by Honorable Madhya Pradesh High Court in case of Patanjali Ayurved Limited, wherein they said that the statutory form of DRC 01 itself provides that the opportunity of personal hearing and opportunity of filing a written submission are two different things. Because the statutory form DRC 01 itself says that the reply has to be furnished by this date, and this is the date of personal hearing on which you have to appear before the undersigned. So the contention by the department that opportunity being heard personally is satisfied once an opportunity of filing a written was given is incorrect because these two are separate things. Secondly, Honorable Bombay High Court and Madras High Court have come down very heavily on department, and that we have seen a change on the GST portal. They've said that the guidelines which have been provided on the GST portal says that to view notices, one has to go in the user services and then click on the link view notices orders. So if the notices or orders are being uploaded on additional notices and orders tab, this is an illegal practice because the portal itself does not ask the assessee to click on the link of additional notices or portal. And that's why now the portal has been changed and both additional notices and notices order tabs are on the same page. And below that, there is a specific declaration that view notices orders would be containing notices and orders pertaining to these issues, and additional notices orders would be containing notices order pertaining to these issues. So this is a very welcome change being brought on the portal. This is because of the various decisions which have been rendered by honorable high courts in the previous months that has forced GSTN to make changes on the portal. Now, another decision by Honorable Allahabad High Court wherein against the date of personal hearing NA was mentioned. So therefore, Honorable Allahabad High Court said that if against the date of personal hearing NA has been mentioned, it is violative of principle of natural justice because it is mandatory upon the officer to give the opportunity of being heard to the taxpayer. In this case, for section 79, Honorable Madras High Court has said that the proper officer has discretion to extend time limit for making payment under section 79 clause C subclause 1. Section 79 pertains to recovery of the demand from the taxpayer once the due period of 90 days has expired or once the demand is crystallized and the taxpayer has not opted for an appeal remedy or the demand which has been created is not stayed by the competent court. Decision by under section 83 by Honorable Calcutta High Court, wherein the show cause notice was issued, but it was to be adjudicated, and during the pendency of the proceedings, during the pendency of the proceedings, 13 provisional orders were issued for attaching the bank accounts of the taxpayer. Honorable Calcutta High Court said that there is no attempt made by the appellant to evade payment of tax and there is no record available on there is no evidence available on the record, and this is one very hard step which has been taken by the department which stalls the very operation of the business. So they have said that if at all a notice, a provisional attachment has to be made subsequent to the issuance of notice and pendency of the proceedings, there has to be a certain evidence that the assessee is attempting to evade tax. And if this is not done, the interest of the revenue would not be protected. But if it is not done, such evidences are not brought on record, the activity of provisional attachment of bank account would be against the interest of the business and would hamper the running of the business. Section 107, which pertains to filing of an appeal. Again, there are many decisions, but I would be discussing the principles of various decisions. One is by Honorable Madras High Court, wherein it said that if an appeal is being rejected for non-appearance of the petitioner, then there has to be a proof of service of notice that there was a service of notice, and in spite of that, the petitioner did not appear. If there is no proof of service of notice, such rejection for non-appearance by the petitioner would be illegal. Then there are decisions by Odisha High Court wherein they relied upon the judgment of Patna High Court and said that the appeal amnesty scheme, which was only limited for orders passed up to 31st March 2023, was an arbitrary scheme because it fixed an arbitrary rate of 31st March 2023. They said that all the orders which have been passed under section 73-74 should be eligible for eligibility of this amnesty scheme, and fixing of an arbitrary date of 31st March 2023 is not correct. There are decisions by various high court wherein they've said that if the online filing has been done in time and a physical copy has been served late, so therefore appeal cannot be rejected merely because the physical copy was served late. If the online filing was within the stipulated time, it should be treated that the appeal was filed within time. Now coming to section 108, which pertains to the revision being carried out by the authority. For section 108, supposedly an order has been passed by by an officer. The commissioner feels that this is prejudicial to the interest of the revenue, and he reviews that order under section 108. So in this particular case, the taxpayer challenged the review of the order under section 108. The commissioner, while passing the order, did not detail out or rejected the various grounds which were raised by the taxpayer. So therefore, Honorable Madras High Court said, while the objections which were made by the taxpayer were noticed in the impugned order, but no specific rebuttal was made for those contentions, and therefore such order warrants interference by the High Court, and therefore the order was quashed and remanded back for reconsideration. Now coming to section 112, which pertains to appeals before the tribunal, and since the tribunal has not been constituted, so therefore there are many matters which are coming wherein the order has been decided against the taxpayer by the appellate authority, commissioner appeals, and they are pending to be filed before the tribunal, and the department is initiating the recovery action. So there are decisions by three high courts, that is Patna High Court, Allahabad High Court, Rajasthan High Court, wherein they have said that if the stipulated amount of 20% of the balance disputed demand left after the deposit of 10% before the appellate authority, if that 20% has been deposited, that demand would be automatically stayed. And what Patna High Court has said, that even if the department has to initiate a recovery, they can only initiate a recovery of 20% of the disputed tax, because this is the amount which they are entitled as of date. They cannot have the benefit that they themselves are not creating the tribunal, and then they themselves are taking a harsh action against the assessee for non-filing of appeal before the tribunal. Other than the decision by Patna High Court, Allahabad High Court, and Rajasthan High Court, there is a decision by Calcutta High Court, wherein they granted a liberty to the petitioner that they have to file an appeal whenever the tribunal is constituted within the time limit prescribed under para 4.2 of circular dated 18th March 2020. And if the appellant, if the taxpayer files an appeal by that time, the department cannot be permitted to take advantage of the peculiar situation of non-constitution of tribunal to realize the amount demanded by the order against which the appeal has been rejected by the appellate authority. Now, coming to decisions under Section 129, which pertains to e-way bill, and most of the decisions are either by Honorable Allahabad High Court or by Honorable Calcutta High Court. One thing which is running common all across those decisions, that intent to evade or mens rea has to be present for levy of penalty under Section 129. So, briefly discussing the various situations wherein the decisions have gone in favor of the taxpayer. In a matter for Allahabad High Court, wherein the petitioner failed to generate the e-way bill on time due to technical errors, the matter was decided in favor of the taxpayer. Wherein a matter before Honorable Calcutta High Court, wherein e-way bill was there, but the delivery challan was not there, and therefore penalty was levied for non-production of the delivery challan. Honorable Calcutta High Court that whatever legal documents, that is e-way bill was there, which have been prescribed by the statute, and delivery challan is not a prescribed document. And since the delivery challan is not a prescribed document and a valid e-way bill was supporting, and there is no intent to evade proved by the department, therefore levy of penalty of 200% of tax cannot be there. Another decision by Honorable Allahabad High Court, wherein Part B of the e-way bill was not filled up. The court said that no intent to evade has been proved by the department, therefore no penalty can be levied under Section 129. Another case before Allahabad High Court in case of Spiral Energy Private Limited, wherein address of the consignee was incorrectly mentioned in the e-way bill, but the address was correctly mentioned on the invoice. So since the address was correctly mentioned on the invoice and an incorrect address was mentioned on the e-way bill and no intent to evade was proved by the department, therefore levy of penalty under Section 129 was held to be invalid. In another decision before Allahabad High Court, in case of Kapil Transport Company, wherein the Honorable High Court took an adverse view against the taxpayer, wherein Part B of the e-way bill was not filled up, and upon detention it was found that there was no sindoor in the vehicle and there were 21 other items. So what the invoice said, that the goods, that is sindoor, is being transported, but in the vehicle there was no sindoor as such, but there were 21 other items. So therefore in this case levy of penalty was held to be justified. In another case before Allahabad High Court, in case of ability, wherein only Part B was not filled up, again the decision was in favor of the taxpayer because no intent to evade was proved. In case of Ashoka PU firm by Honorable Allahabad High Court, wherein the vehicle has broken down and driver of e-way bill could not update the e-way bill because there was Bharat Bandh on that day also. Since no intent to evade was proved, therefore no levy of penalty could be there. Another decision by Honorable Allahabad High Court, wherein there was difference in date in the invoice and e-way bill, because in the e-way bill the date offering was 2nd August 2018, wherein the branch transfer invoice was 31st of July 2018. So the invoice was issued for 31st of July 2018, but the e-way bill contained the date of the invoice as 2nd of August 2018. Since there was no intent to evade, there was no levy of penalty held to be justified. In another decision by Honorable Allahabad High Court in Globe Panel Industries, wherein the e-way bill was expired 10 days prior, but there was no dispute regarding consignor and consignee, and there was no any other evidence on record that there was an intent to evade tax. In such case, penalty under section 129 was deleted. In case of Hawkins Cookers Limited by Honorable Allahabad High Court, wherein out of 8 invoices, the address on 4 of the e-bills was correct and 4 of the e-bills was incorrect. But the incorrect address was also relating to the one of the offices of the petitioner. So the Honorable High Court held that since there is no intent to evade, therefore there can be no levy of penalty, and they also quoted Shastra by Chanakya, when they said that government should collect taxes like a honeybee collects honey from a flower without disturbing its petals. So therefore, inadvertent mistakes which are being committed by the taxpayer cannot be made the basic ground for levy of penalty on the taxpayer. In another decision by Honorable Allahabad High Court in case of Nokia Solutions, wherein Part B was not filled, and there was allegation by the department that there would be evasion of tax because the place of dispatch and place of receipt is only 75 kilometers, and therefore the e-way bill can be used multiple times. Allahabad High Court said that no intent or no evidence has been brought on record. So mere apprehension that it would be used multiple times, even though Part B has not been filled up, would not be sufficient for levy of penalty. Honorable Calcutta High Court in case of Saraf Traxim Limited, wherein the e-way bill had expired and the vehicle was intercepted. So therefore, mere interception with the expired e-way bill would not be sufficient for levy of penalty because no specific evidence for evasion of tax was brought on record. Section 155 decision by Honorable Madras High Court, wherein they said that if transitional credit has been claimed by the taxpayer, it is upon the taxpayer to provide all the relevant documents which establishes its claim. But if he is not able to provide all those documents, the burden of proof under section 155 is not discharged by the taxpayer and therefore is not entitled for the claim of credit. Section 160, wherein the court relied upon its judgment and said that the guise of the provisions of section 160 and 169, an unsigned order cannot be held to be a valid order. An unsigned order is not a valid order in the eyes of the law. Or order has to be signed and only then it would be held as a valid order. Therefore, the unsigned order which was passed against the taxpayer was held to be invalid and quashed, and the authority was directed to pass a fresh order. Section 169, wherein again Madras High Court said that merely service on the portal or service through email would not be sufficient, because looking to the classes of the taxpayer, the administration should come up with certain alternative mechanism for proper service of the notice of orders, and rigidity of the administration in such matters may serve the purpose and would be violative of principle of natural justice. Section 171, there was a decision by Honorable Delhi High Court in the month of January wherein they upheld the validity of the provision of section 171, that is anti-profiteering. Now, matter has reached to the apex court, and in the matter of Excel Rasayan Private Limited versus Union of India, wherein the decision by Honorable Delhi High Court has been challenged before the Supreme Court, but Supreme Court has not only accepted the appeal and issued the notice. No stay on the proceedings has been granted by the Honorable Apex Court. Rule 86A, the decision by Madras High Court, when they said that merely mentioning the name of the supplier, that this is the supplier from which the credit appears to be an invalid credit and that's why the credit is being blocked, would not be sufficient. There should be concrete evidences for why the credit has been blocked and why the credit passed on by the supplier to the recipient is a ineligible credit, and therefore a harsh action of blocking of credit under 86 rule 86 is being taken against the taxpayer. So these were the significant decisions by honorable high courts across the country which were given during the last month. And if there are any queries by the participants, I would be happy to take the queries and hand over the session back to the organizers. If there are any queries from the participants, we can take the queries. RK Kunalaji has asked that can you suggest a publication or website which gives details of judgment of Supreme Court and various High Courts under each section of CGST since 1st July 2017? Kunal sahab, Taxmann portal is giving the judgments of various High Courts and Supreme Court which have been categorized on a section-wise basis. There are various filters on the Taxmann portal which you can access. The circumstances under which adjudication can be done under section 73 or 70 was quite confusing. The department often alleges that the taxpayer has to self-assess his liability and file return. The onus for claiming lies with taxpayer, and discrepancy for short payment of tax come to notice by through audit. Yeah, Pranatha, there are many multiple decisions in the service tax regime wherein they have said that merely stating that if we have not conducted the audit, the discrepancy would not be identified is not a sufficient ground to invoke the extended period. So you can refer to those decisions and say that a specific non-compliance has to be identified or pointed out in the show cause notice. Secondly, we have to understand the scope of section 59 vis-a-vis 155. Although this is a very detailed topic, so I would be briefly touching upon it. Section 59 says that whatever I am filing in my 3B is a self-assessment. And if I go through the definition of assessment which has been provided in CGST Act in section 2, it clearly says assessment includes determination of tax, and the assessment means determination of tax and includes self-assessment. So whatever I am self-assessing is a sort of self-assessment. Once I have made a self-assessment, the onus is always upon the department to prove me that I am wrong, and for that for proving that I am wrong, there has to be evidence. Mere allegation that I had incorrectly assessed liability would not be sufficient. So, by way of section 59, whatever allegation has to be made by the department against me has to be on the basis of an evidence. But what section 155 does, that if section 155 would not have been there, in ITC also the burden of would have been on department to prove that I have incorrectly availed ITC and to provide the evidences of the same. By way of insertion of section 155, an exception has been created wherein, except for ITC, the burden of proof is on the department to prove that I was incorrect, and the evidences also have to be given by them. But in case of ITC, the burden is upon me to prove that whatever basic condition which have been provided in the statute, that have to be fulfilled by me and have to be submitted by me whenever asked by the department. It is not upon the department to first make an allegation, give the evidence, only I have to submit the evidences of the claim of ITC. So this is a brief interpretation of section 159 vis-a-vis section 155. Sumitji, this is a very detailed question that how we can deal to notice that we have short claim ITC in 3B versus 2B. Although there is one book written by me, how to deal notices with input tax credit, wherein specific replies and issues have been discussed for on that part. So I would not be going into detail because this is a very vast topic. But yes, for me, what I can briefly say, for 9th October 2019, there is no provision in the law which speaks for creation of demand between 3B and 2A. After 9th of October 2019 till 31st of December 2021, there is no section in the Act which provides for any such enabling rule for creation of demand. So, Rule 36(4), in my opinion, does not have a enabling section or provision in the statute. Post 1st of January 2022, yes, there is 16(2) there is 16(2)BA with effect from 1st of October 2023. But then, in my opinion, the right of the genuine recipient cannot be denied merely because there is a provision, and there are a whole host of decisions in case of Arise India Limited, in GST, or in case of Daiichi Kagaria, that a genuine recipient cannot be denied the. If GST registration cancelled 2 years back but received DRC 0 in difference against review versus 2 out, see the portal will allow for you to file an appeal for which you have received a DRC 07 even though your registration might be cancelled. There is a decision a query by Dattatreya Kakade regarding specially Supreme Court related decisions. Yes, there are decisions on Taxmann web portal for Supreme Court as well. There is a specific filter, and you can mark a filter for Supreme Court and search the decisions of Supreme Court in GST. So these are all the queries which are there. Queries in whether ITC to reverse if business is transferred as going concern. Abhilasha Kakani ji, there is no requirement to reverse the ITC for businesses being transferred as a going concern, because if we go through Schedule 2, it specifically says that it is not supply under Schedule 2, and the exemption entry which is there in 12/2017, this is only for a limited for the service involved in the transfer of business as a going concern. As such, the entire supply of the business being transferred as a going concern, there are decisions of AAR as well, which they have said that this is not a supply and therefore the ITC is not required to be reversed. Any time there is a query from Vinod Kumar Khurana, any time limit for issuance of ASMT 12. See, the only thing is that if ASMT 10 has been issued and there is no issuance of notice in DRC 01 within the prescribed time limit for the respective year under section 73 or 74, if no has been issued by that time limit under section 73-74, treat the matter as closed even though ASMT 12 might not have been issued. Department has served an order in original for 1718 on 28 February 2024, but order dated is 26 October 2023. Order contains paras where RCM short remittance is identified and levy made under section 74. Can we contest the order as a time barred? Since RCM should have been levied under section 70, the order should have been issued before extended due date of 31st of December 2023. See, the order has been served on you on 28th of February 2024, but the order date is 26th of October 2023. So the first thing which we need to see is whether the DIN has been mentioned on that order and what is the actual date of issuance of the order. And secondly, if the order has been served manually to you and has not been uploaded on the portal by the respective due date of 31st of December 2023, for orders passed under section 73, in that case, yes, we can challenge the issuance of the order itself. So we have to divide it into two parts. First, initially what the query has said that the order has been issued under section 74. And since the order has been issued under section 74 by virtue of section 75 subsection 2, even if the issuance of order under section 74 is challenged and the appellate authority says that yes, there was no intent to wait and therefore invoking section 74 was incorrect, therefore the matter is remanded back for issuance of order under section 73. Now, once the order is issued under section, the matter is remanded back for proceedings under section 73. The question now becomes important that whether the order was issued within the specified time limit. Now, when the issue is being taken that whether the order was issued within the specified time limit for section 73, the question now comes that whether the order was signed firstly on 26th of October 2023 or was signed after 31st of December 2023. For that, we can see and check the DIN, which was generated on the for the specific order. Secondly, even if the order was signed before 31st of December 2023, the next aspect which we have to check is whether the order was uploaded on the portal before 31st of December 2023. If the order was not uploaded before 31st of December 2023, then it is violation of Rule 142. And if the rule provides that the order has to be uploaded along with the summary, it has to be in that specific manner, and that is what the instruction number 4 oblique 2023, which was issued on 23rd November 2023, says that the orders or the notice have to be uploaded on the portal. So if the order has not been uploaded on the portal by 31st December 2023, then we can challenge the validity of the order also. So we have to make a sequence of events and then identify what are the issues and how they have to be challenged. First, in my opinion, section 74 and 73, invoking of section 74 has to be challenged. Then the alternative ground has to be raised that the order was signed whether on 26th of October 2023 or subsequent to 31st of December 2023. Then the alternative third ground has to be taken whether the order was uploaded on the portal by 31st of December 2023 or it was not uploaded and merely served physically on 28th of February 2024, and then the challenges have to be made. I guess the issue was technical, so I've been able to communicate the actual intent, and the who has raised the query has understood the crux of the issue. There's a question from Venugopalji that DRC 07 has issued with demand even ITC credit availed less than GST 2A. So you can move a rectification application under section 161 that DRC 07 has been issued and the credit availed is less than GST 2A. So there is a mistake apparent from record. There is a query from Hardeep Singh that sometimes they use pre-generated DIN which doesn't bear even party name. So in that case, an RTI can be filed and information can be sought from that for which party or for when this particular DIN was generated and why the party name has not been given, and how can I come to know that DIN was particularly generated for my party and has not been mentioned on any other notice. Second question from Venugopalji, for only income in the form of interest from deposit and banking deposit interest can be eligible for ITC credit like professional charges relating to ITC or required to reverse ITC as per rule 4243. See, what I can understand is that you are only having an income from deposits and bank. So first point is why at all we are required to get registered. See, if I apply explanation to rule 42 and 43, that for the purpose of interest which is being earned, no reversal is required to be made under rule 42-43. So supposedly there are two supplies. One is taxable supply and other is exempted supply. In that case, by virtue of that explanation, it would be treated that all the supplies which are taxable in nature have been used for making the outward supply which is taxable in nature. But supposedly I only have exempted supply, and that also in the nature of interest income. So the question would come that yes, the ITC is not a common credit, but why it should not be treated that the inward supplies were specifically related to outward exempt supply. So this is how we can see, and if there are only exempted supplies and the ITC is there, department would not be raising a query for common credit. They would be specifically saying that all the inward supplies were relating to the used or intended to be used for making exclusively exempted supplies. The last query from Kharani, then I would be wrapping up today's session. That if the SCN is issued under section 74 and taxpayer justifies that the issue did not involve fraud, can the adjudicating authority adjudicate the same under section 73? Kharani, the answer lies in section 75 subsection 2, because once an order has been issued, that has to be appealed before the appellate authority, and if the appellate authority decides that the matter was not involving intent to evade, but since the notice under section 74 was within the time limit of section 73, therefore the matter can be remanded back to the officer. But if the notice was after the due date for issuance of section 73, then on the basis that there was no intent to evade and the challenge was made before the appellate authority, the entire proceedings would be dropped and cannot be remanded back to the officer. So with this, I would like to conclude today's session.